Hi, I'm Christine Ailiff and I look after the Client Services Department at Charles Cameron Associates. Welcome to the second in our series of first-time buyer frequently asked questions. Today we're going to be looking at questions around deposit. Is there a maximum percentage that parents can gift me as a deposit?
No, there's no maximum that parents can gift. We would just need a gifted deposit letter and an explanation that your parents are gifting the money, that it's not a loan, so they don't expect repayment of the money. Because if you had to repay the loan at, say, £1,000 a month, that speaks about your overall affordability. And obviously lenders would be keen to learn that because they need to know, are you still going to be able to service a mortgage payment?
Is there a limit to the amount of money that you can receive as a gifted deposit from family who are outside of the UK?
No, not as such, not for UK mortgage lenders, but it would of course be subject to the limits within the donor country. So where the money is coming from, if your parents live abroad, there will be certain limitations naturally in that country, so they would need to observe the limits of their donor country.
If my parents were to send me money for my home deposit from abroad, is there any extra fee or cost incurred?
There may be possible transfer fees, of course, but from a mortgage perspective in the UK, no, there's absolutely no difference whatsoever.
Part of my partner's deposit is coming from bonds which are in his parents' name but are his. Should we get these changed into his name, and will it affect the mortgage process?
Well, if the funds are his, they should be transferred into a bank account in his name, or we can again use a gifted deposit letter where the parents can explain that they're giving them the money as a gift. But if it's very much his money, then it should be transferred into his name, and then we can explain and provide the lender with a robust rationale as to why the money is his and not a gift.
I've read that many banks now want a minimum deposit of 20%. Are 10% deposits still available anywhere?
Yes, they are. And as we record this, the biggest lender in the UK has just returned to lending 90% mortgages, which is Halifax. Nationwide lend 90%, as do Accord and TSB. So 90% mortgages are available. At the moment, they tend to be only for first-time buyers, so there is a slight restriction there. There may be other caveats in there as well. So, for example, no flats are allowed, maximum term of 25 years, a maximum of 25% gifted deposit, so the rest of it must come from personal savings. So yes, 90% mortgages are available. They're available from mainstream high street lenders, but unfortunately there are additional caveats being placed at the moment during COVID that weren't there before.
What's the advantage of paying the interest only on a mortgage compared to paying the interest and the capital borrowed at the same time?
It's unlikely that first-time buyers at a high loan to value, such as 85 or 90%, would be able to get an interest-only mortgage. Interest-only mortgages are very much now for high net worth and ultra-high net worth clients. There are minimum income amounts involved, typically minimum equity amounts involved to qualify for an interest-only mortgage. And these are quite significant. So it's incredibly unlikely that any first-time buyer at a high loan-to-value mortgage would actually qualify for an interest-only mortgage. So it has to be repayment, and on government schemes like Help to Buy, for example, it has to be a repayment mortgage too.
Roughly how much should we expect the process of buying a house to cost us, excluding the deposit itself?
This again depends really, of course, on the purchase price, whether stamp duty will apply, so whether you're buying before the stamp duty holiday ends on the 31st of March 2021, or whether you're buying after, whether there'll be a first-time buyer incentive to replace that at the time, and whether indeed you're a first-time buyer or not. So you'll have the stamp duty bill to find, or not, as the case may be, but you'll also then have the purchase fees. Now this will be a solicitor. Typically a solicitor's will charge around £1,000 plus VAT for their work. You've then got the local searches and the land registry, that's typically another £1,000. So you are looking around typically about £2,200, maybe to £2,500 for the typical legal bill. It may be a bit more for leasehold properties than freehold because there's more work involved because the solicitors have to inspect the lease.
Would you say it's better to purchase a property earlier with a lower deposit and a higher interest rate in order to start paying off that mortgage as early as possible? Or would it be better to wait until we've saved a higher deposit in order to get a better interest rate, but we'll start paying that off later?
This is a question that we are often asked, and the simple answer is you should buy a property as soon as you can. It's as simple as that. Property is a very good investment, particularly in the UK, and with capital appreciation the way it has been over the last few years, if you wait, you'll simply end up paying more for the property, which means you'll end up taking a higher mortgage, so ultimately you'll end up paying more. So my answer is always the same: you should buy as soon as possible, the sooner the better.
I intend on buying my first property with my partner, who also owns a property outside of the UK. Can we still be considered as first-time buyers?
No, I'm afraid not. From the stamp duty perspective, which I think is probably what that question is referring to, the current stamp duty holiday is not just for first-time buyers. It's available to anybody, but the previous stamp duty holiday was only for first-time buyers, and it was strictly for somebody who'd never bought a property ever before. So unfortunately, if your partner owned a property elsewhere in the world, or if you'd ever owned a property globally, you would not qualify for the first-time buyer stamp duty incentive, I'm afraid.
I inherited and part own a property with my siblings. Am I still considered to be a first-time buyer?
Ironically, yes, you are, because you would never have actually bought a property if you'd inherited a property.
Thank you for taking the time to watch this video. We do hope that you found it useful. Please do keep checking our Knowledge Hub for lots more interesting videos and articles on the mortgage market.